Hey everybody, Chuck Barone. Thursday, December the 21st, 2022. We're rounded into the home stretch now, guys. Ho, ho, ho. Time for some holiday festivities. Some time to do our consumer thing and spend some money buying some presents for everybody. It's my favorite time of year, I got to admit. I just can't believe it's here so fast. Wow, it just seems like we were just wrapping up the third quarter. And here we are already into December and the fourth quarter coming to a close really quick. Lots of doings though. Let's get into the show real quick. As always, we want to welcome you to the show and thank you for your support. We appreciate you guys, all the things you do, watching the videos, of course, your likes, comments and questions, the shares you guys are sharing with people. We can't tell you how much we appreciate it. Be sure to check your notifications and your subscription. It looks like YouTube's doing their purge with us one more time. So double check that and on with the show. Today in the markets, well, I think markets had a little bit of indigestion after yesterday's irrational exuberance, to quote Chairman Greenspan. Today, the stock market ended mixed. It was really not much of a day at all, with the Dow and S&P down small, the NASDAQ eking out a very small gain, some earnings disappointments today in the stock market, and troubling signs ahead as far as now the economy and this recession situation. In the bond market today, though, a big rally in bonds today. I got to tell you guys, I don't know if this is just some kind of weird trading strategy I'm not up on or what the deal is. But today, to give you an idea of what went on today, the 10-year Treasury today was down 17 basis points to 3.53. It was just a minute ago where I was saying it was going to be at 4 and probably not come back under 4. I tell you right now, this will not last. The 2-year, by comparison, was down 13 basis points to 4.23%. So we still got a pretty big spread here, 70 basis points, narrowing a little bit today. But I tell you, this bond market exuberance, I don't get it, because the data that came today was not great, even though they want to turn it into something great. And with inflation where it is, and the Fed making their intentions clear, well, I think this bond rally might have been just a little bit much. But maybe who knows, maybe they had priced in a full 3 quarters for December, and now they're taking that out. I just, it just doesn't make a lot of sense to me. But I'm not a Wall Street trader, and I'm not hip to all of their strategies. Today, the dollar down pretty big. Again, this all points to they believe that this pivot, this fabled pivot is coming, and that somehow, a 0.5 point Fed rate increase is not significant. Well, I guess not in the face of, several 75 basis point bumps. But an ordinary Fed rate hike is a quarter. Half is usually like a sign that the Fed's feeling like there's some trouble. And 3/4 is like, we haven't heard of that in decades, okay? So now the Fed's going to raise a half. We know that's coming in 2 weeks. We know they'd already, Chairman Powell, our friend St. Jerome from Jekyll Island, the miracle worker. Look at this bond market again. Anyway, he already made clear that the Fed has to, what did he say yesterday? The quote of the whole thing. Rates may have to go higher than they originally anticipated, and they had originally anticipated a terminal rate of 4.6. They may have to go significantly higher and stay there for longer. So what that tells us is the overnight rate will eventually probably reach about 5%, and they're not going to just turn it around and start lowering it as soon as they touch the line there. It's like, okay, we hit 5, now it's time to turn it around. It's not going to work like that. They're going to keep those rates up there for a while until they absolutely stamp out this inflation. Now, that is the number one mandate the Federal Reserve has. They're going to get a lot of political pressure. It's already starting. We'll see if they got the stones to follow through on all this. Metals today having a really nice, with the dollar down like that, down to 104 on the dollar index. Well, metals had a great rally today. Gold, really nice day, breaking 1800, sitting at 1803, up $34. Silver rallies 58 cents, $22.87 per ounce. These are great numbers for metals right now, guys. You know, I thought that we might see gold at 1800. I said it just a couple of shows ago. I didn't realize it would happen this fast. But I know metals have wanted to rally. I think there's still some room left for metals to rally as this dollar comes back down to earth. So yay, good day for I know lots of you guys out there are holding precious metals. I'm glad to see this rally for all of you guys. Oil today up just over 1%, sitting at $81.40 for a barrel of West Texas Intermediate. This is the in the comfort zone for oil, it seems like right now. There's been a trading trough of between $80 and $85. It briefly breaks out, it comes right back down, it breaks under, it comes right back up. It looks like that's where the market's comfortable right now as far as the buy-sell side. Well, it's not where I'm comfortable buying gas, but anyway, oil in its trough. Gas today having a very moderate day for gas, down 1.3%, $6.84 for their million BTU. A very volatile market. When 1.3% move in a day is considered calm, at least by me, you know this market's been crazy. Bitcoin today down very small, 133 bucks or so, sitting at 16,923. You know, Bitcoin's holding on. This is not a market I favor right now. I think there's any shock that could come or any new revelation, and there will be something. I mean, there's just been too much money in this market now for there not to be some crazy, especially with basically no regulation and a lot of offshore stuff. So be very cautious with your crypto stuff, guys. Today in news you guys need, some big stuff today. Well, I thought that the unemployment number would be the big topic of the day, but it really didn't turn out that way. But unemployment did fall by 16,000 claims to 225. The market for jobs is still strong, guys. You know, 1.7 jobs for every person looking for a job. They were expecting 238,000 claims, which would still have been down from last month's 240, down to 225. So the jobs are still there. I just don't know exactly what kind of jobs, but the market's still. This would be viewed, I'm guessing, by the Federal Reserve as a strong market, strong jobs market. But the interesting stuff today, these two stories both coming out. The Fed using their personal consumption expenditure index, right? This is the one that they tend to like more than their own CPI numbers. What does that tell us? It's showing inflation slowing down, okay? And I would have thought that with a report like this, the market would have rallied, right? But instead the market didn't really rally. I guess yesterday's rally was enough. But the PCE came in today. The top line falls to 6% inflation from 6.3% in September. The core rate falls to 5% from 5.2% in September. Now, we all know what the Fed target numbers are, and they can say what they want. I think the 2% number they always talk about is their core number. These numbers are still highly, highly elevated, guys. I mean, these are, 6% inflation is triple the target. So does that tell us that the Fed is going to ease up on fighting inflation? It doesn't signal that to me. And this is the way we see with CPI. Now, I'm sure CPI will look better this month than it did last month, just like this PCE did. But it'll still be a pretty gnarly number. It's typically higher than this number, so we'll probably see somewhere in the high 6s, maybe 7. So the fight's not over yet, guys. Get ready and be prepared for these rate hikes to continue and their rates to stay higher for longer. Here's the news that caught my attention today. I wanted to go over this real quickly before we close today. We talked a lot in the show earlier about Blackstone and the corporate takeover of real estate. I thought that, the real estate, the corporations, the private equity groups, the venture capital guys, and, even pension funds, everybody was getting in on the shenanigans. Well, now, Blackstone has a $70 billion real estate fund. It's crazy. It doesn't even trade on exchange either, which is really an extra crazy to raise that kind of money without having to be on any kind of exchange. I guess you buy the asset directly from Blackstone itself. They must have a trading desk there that they use to do that. Anyway, what happened today was pretty amazing. Blackstone was forced to limit withdrawals from the fund. Everybody knows what's happening in real estate. Real pro players are now starting to come to the same conclusion I've been telling you guys since day one this show started last June. Real estate's going to correct, man, and it is not going to be pretty. So everybody in this real estate fund, which has been a big performer for Blackstone, I mean, let's face it, real estate's been sizzling hot. Even right now, with real estate in a death free fall, prices are defying gravity and staying high. But listen to this. Blackstone paid out over $1.8 billion last month in redemptions. So people started cashing out last month. This month was a bigger problem. So they cashed out the $1.8 billion last month, even though it's higher than the real estate investment trust limit allows per month. Okay? I guess what they do, the way they put the fund together, the real estate, the trust together, with total withdrawals and redemptions for the month can only equal a certain percentage of the net asset value of the fund. So as the fund drops, the withdrawals do. It's kind of a safety mechanism so there's not a giant run on those funds, right? Because when you're in real estate, typically a lot of your money is leveraged and it's kind of hard to unwind super fast to redeem these funds. Anyway, this month, so last month they were forced to redeem $1.8 billion. This month, they had requests for over $3 billion in redemptions, which triggered a provision in their program. So they basically cut people off, and they limited the withdrawal to 43% of what they asked for. Now imagine you're a big investor and you got millions of dollars in this fund. And you want to lighten your exposure, so you ask them for, $2 million of your investment out. And they send you $860,000. Can't get your $2 million. Can't get your own money out. Well, what this is going to do, I would be shocked if it didn't now. I'm not no Nostradamus, right? But I'm thinking in my mind, if this gets out into the broader media, where people are actually talking about this, Blackstone could see a run on this fund that could crater the entire thing. When people can't get to their own funds, typically that triggers more than just concern. So I think that Blackstone now, with this colossal fund, even though it's, again, the returns have been stellar. Even this year it's returned over 9%. They got big trouble over there, guys. And I got to say, on a personal note, for just me, I'm not rooting for anybody to lose their money, and I'm not rooting against Blackstone. But you know how I feel about the corporate takeover of real estate. I feel like corporations are the reason these real estate markets are so distorted. They're so overpriced. Because these guys are playing with everybody else's money but their own. So they don't care if they're paying above appraised value. They don't care about extra stock costs and fees and costs to carry because it's not their money. So they're shutting out people who want to buy houses to live in. Well, and if anybody thinks that turning the real estate market in this country over to corporations is a good idea, please put that in the comments and send me an Ask Chuck Barone at Gmail saying that, so you can get my full length response, because it would not fit in this short video. We only got a few minutes more left to get in. But anyway, so Blackstone in deep doo-doo on this fund. I think as people are going to find out they can't get their money, that's going to cause a panic. As they see prices continue to decline in real estate, that's going to really exacerbate the panic. Blackstone, I'm sure they got great lawyers, and they're just so ultra wealthy that I'm sure they're not going to have an issue with legalities and fending off these investors. It's going to be fascinating to watch it. And as always, I'll be keeping you guys up to date on all this stuff as it comes across. Anyway, guys, that's it for today. There's way more stuff. I got more things happen today, manufacturing data and all kind of other stuff come out. We'll talk about that tomorrow to wrap up the week. I don't want to run this video into the super long, but we appreciate your support. As always, if you like what you're hearing, hit the like button, share the video with your friends and subscribers, ask your questions, leave your comments. We really appreciate your support. We'll be back tomorrow to wrap up this crazy week to get the ball rolling in December. We appreciate you guys. Till we talk tomorrow, take care. Thanks.